Hello, everyone. Thanks for joining me today. Nobody wants to hear this, but I think round two is coming. And if it does, the people who saw it coming and prepared are going to look back at this moment as one of the most important financial decisions of their lives. The people who didn't, they're going to watch it happen from the sidelines, confused about why everything got so expensive so fast. I'm going to tell you exactly what I think is about to happen, why I think it, and what you can actually do about it. And just to be clear up front, none of this is investment advice. This is just my personal analysis. I'm not a financial advisor. What you do with your money is entirely your decision. But I think you need to hear this. The first Iran-US war already happened. February 28th, 2026. US and Israeli strikes on Iran. The Strait of Hormuz effectively shut down. The IEA called it, and I'm not exaggerating here, the largest supply disruption in the history of the global oil market. Not this year, not this decade. History. Oil surged above $115 a barrel. Gas hit over $4 a gallon in America. The global economy started shaking. And then a ceasefire happened. Markets calmed down a little. Everyone exhaled. But here's the thing nobody is saying out loud. The ceasefire is fragile. Peace talks broke down. Vance came back empty-handed, and the underlying problem, the reason this war started in the first place, hasn't been solved, not even close, which means round two is a very real possibility. And if you look closely at what Trump is actually doing, I think you can see exactly where this is heading. Let me tell you my read on what's going on. And again, this is just my personal take, but I think it matters. Trump made a fundamental strategic miscalculation with Iran. Or, and this is also possible, someone is feeding him very bad information. Either way, the result is the same. The logic was simple. Eliminate the Iranian leadership and the people who come after them will fall in line. Submit. Accept whatever deal is on the table. Here's the problem. That's not how Iran works. That's not how it has ever worked. Every time a leader is removed, whether through strikes, sanctions, or internal pressure, the next person who steps up comes in trying to prove they're even more resistant than the one before. It's a built-in feature of the system. You don't weaken the regime by cutting off heads. You give every potential successor a reason to be more extreme, not less. And most people miss this completely. The Iranian system isn't built around individuals. It's built around ideology and institutional loyalty. There's no single throat to grab. The moment one figure is gone, the system produces another one. And that next one has every incentive to show the world, and their own people, that they can't be intimidated. This has been playing out in real time, and Trump seems to be watching it happen right now, deciding whether to try the same thing again with the new faces that showed up, or escalate to the next level. Here's what the next level looks like, and this is where the money conversation really starts. If removing leaders doesn't work, and the evidence strongly suggests it doesn't, the logical next move is to go after Iran's economic infrastructure, specifically the oil facilities. Karg Island processes roughly 90% of Iran's oil exports. If that gets hit, you're not just talking about removing Iran from the energy market. You're talking about a signal to every tanker operator, every insurance company, every shipper in the region that nothing is safe. Think about that for a second. Right now, even with a ceasefire, analysts who were polled said oil prices probably won't return to pre-war levels for at least a year. That's without any new escalation. That's the floor. The Strait of Hormuz is still partially restricted. Shipping confidence is destroyed. Insurance costs are through the roof. And an estimated 136 million barrels of crude are still stuck in the Gulf. Now imagine round two. Imagine strikes on Karg Island. Analysts have said publicly that scenario pushes Brent crude toward $120 immediately. Some are modeling $150. A few are saying $200 is not off the table if disruptions are sustained. This is the part that changes everything. All three scenarios, new leadership elimination that fails again, escalation to oil infrastructure, or even just prolonged Hormuz uncertainty, they all point to the same thing: higher oil, significantly higher oil. The only real variable is how high and how fast. Now here's what I find really interesting from a money perspective. Most people hear oil going to 150 and they think, that's bad. That means everything gets more expensive. Gas, groceries, flights, everything. And they're right. It will be bad for most people. But here's the brutal truth about money. Bad for most people doesn't mean bad for everyone. It means there are going to be clear winners and clear losers. And the difference between those two groups is almost entirely about what they did before it happened. Most people wait for confirmation before they act. They wait until oil is already at $150 to start thinking about energy stocks. By then, the move has already happened. The people who made real money on the Ukraine war didn't buy XLE when it was up 30%. They were already there. And when the move came, they watched their positions go up, while everyone else was panicking about gas prices. That gap, between being early and being reactive, is where real wealth is built or missed. So let me get into the practical side of this, because I'm not just here to tell you the world might get more complicated. I want to give you something you can actually use. First thing, if you believe that oil prices are heading higher, and based on everything I just laid out, I personally do, the most direct way to express that is through energy sector exposure. XLE is the most liquid energy ETF out there. It holds ExxonMobil, Chevron, ConocoPhillips, and other major U.S. energy producers. When oil goes up, these companies make more money. When they make more money, the stock goes up. And remember what happened in 2022 during the Ukraine war. XLE was up roughly 65% in a year when the rest of the market was down 18%. And here's the thing, this situation is structurally more severe than Ukraine. Ukraine affected one major oil producer, Russia. The Iran situation affects the Strait of Hormuz, which is the transit point for roughly 20% of global oil consumption. That's not one country's supply at risk. That's a choke point for the entire world's energy trade. If that choke point stays disrupted, which it is right now, the upside case for energy stocks is significantly stronger than anything we saw in 2022. Second thing, natural gas plays deserve attention too. Qatar declared force majeure on gas exports because Iranian drone attacks hit their facilities. Qatar supplies 20% of global LNG. European gas benchmarks nearly doubled in days. U.S. natural gas producers and LNG exporters, companies like Cheniere Energy, stand to benefit enormously if European and Asian buyers scramble for alternatives to disrupted Middle Eastern supply. This is a second-order effect that most casual observers miss completely. Third thing, defense sector. We've talked about this before on this channel, but it's worth repeating in this context. Lockheed Martin was up 40% in 2022. In 2026, with an active shooting war involving advanced U.S. military systems, defense budgets across NATO and the Gulf states are already moving higher. The backlog of orders at Raytheon, Lockheed, Northrop Grumman is bigger than it's ever been, and if round 2 starts, those backlogs get longer. Defense is a direct financial beneficiary of prolonged conflict, regardless of how the conflict ends. Fourth thing, and this is the one most people skip, gold. Gold is the one asset that doesn't care which side wins. It doesn't care if there's a ceasefire or an escalation. It just responds to uncertainty, inflation, and loss of confidence in paper currencies. And right now you have all three. Goldman Sachs raised recession risk to 30%. Inflation is running hotter because of energy costs. The Fed is stuck. They want to cut rates, but surging oil is making that complicated. That's a perfect environment for gold. GLD is the simplest way to get exposure, and a 5 to 10% allocation is essentially a hedge against everything getting worse than expected. Now let me be honest about the other side of this. I could be completely wrong about round 2. The ceasefire could hold. Peace talks could restart. Trump might make a deal. The Strait of Hormuz could reopen fully. And if that happens, oil pulls back, energy stocks correct, and everything I just described reverses at least partially. That's a real possibility, and I'm not pretending it isn't. Here's the thing though, even in that scenario, even in a world where peace breaks out tomorrow, oil analysts are saying prices don't go back to $75 for at least a year. The damage to inventory, infrastructure, and shipping confidence is already done. So the downside case for energy positioning is limited. The upside case, if round 2 happens, is very significant. Asymmetric is the word you want to remember here. When the potential gain is much larger than the potential loss, and the underlying logic is this clear, that's when smart positioning makes sense. Not all in, not gambling your savings, but a thoughtful allocation toward the sectors that benefit from a scenario that has a very real and growing probability of happening. Let me zoom out for a second, because I think there's a bigger lesson in all of this. Most people go through life treating geopolitical events as things that happen to them. The war starts, gas prices go up, they feel worse off. The ceasefire happens, gas comes down a little, they feel relieved. And the whole time, they're completely passive, just reacting, just getting pushed around by forces they feel like they have no control over. But here's what I've come to believe about money. Financial intelligence isn't about predicting the future perfectly. Nobody does that. It's about understanding the range of possible futures and making sure your financial position benefits from more of them than it suffers from. That's it. That's the whole game. And when you start thinking that way, a complicated geopolitical situation like Iran stops feeling like something scary happening to you. It starts feeling like a set of variables you can actually reason about. You can't control whether Trump makes another move. You can't control whether the Hormuz stays open. You can't control oil prices. But you can control where your money is positioned when these things happen. And that difference between being positioned and not being positioned is the difference between watching the news and actually using it. Let me bring this home. The first Iran-US war already showed us the playbook. Oil spiked, energy stocks went up hard, gold moved, defense names climbed, the broader market got rattled, and people who had prepared for exactly that kind of scenario came out significantly ahead of people who just watched it happen. Round 2 hasn't started yet. We don't know for sure that it will, but the conditions are there. The strategic logic points toward escalation. The ceasefire is fragile, the peace talks broke down, and the one thing every scenario has in common, even the optimistic ones, is elevated energy prices for an extended period. That's the analysis. That's why I think oil above $150 is more likely than most people want to admit right now. And again, this is just my personal take, not investment advice, not financial guidance, just one person's read on a complicated situation. Do your own research. Talk to a financial advisor if you need to. Don't make major financial decisions based on what some guy on the internet said over Minecraft footage. But if any of this makes sense to you, if this analysis lands, then you know what to do. The window where preparation makes a difference is always before the event, not during, not after, before. And right now, before is still available. If this got your brain working today, drop a like. And seriously, drop your own take in the comments. Do you think round 2 is coming? Do you think Trump figures it out? Do you think a deal gets done? I actually want to know what you think. This is a conversation worth having. Subscribe. See you in the next one.